I'd like to welcome you all to a small interview on the report that Alex Lightman did on digital assets, which is a hot topic because we are experiencing a big paradigm in this area. Lots of things are changing. I would like to welcome our guest today, which is Huang. He's a co-founder of Metaverse DNA. I think he's a very well-known author in the Chinese field, books on blockchain. He's a very renowned speaker worldwide for many universities of name. We are going to have him on the next Cloud Conference as one of our keynotes to explain a little bit more about the passion that's really his thing right now, which is digital identity, avatars, and how we can introduce them in daily users' lives. But today, I want to have a small discussion about what Alex talked about in his Lightman report, which was digital assets. Ken, if you look at digital assets, I mean, due to the pandemic and due to, I would say, worldwide banking, I wouldn't call it instability, but you know, there's a lot of dramatic change in that area. So how do you see that transferring these assets for a normal user can be safe in view of decentralized, how is this best arranged?
I think this is a very huge topic, but I just give some key points here, especially from the product development perspective. When we look at the digital asset in this DeFi or the blockchain technology enabled world, we certainly need using some traditional wisdom in terms of security. First is we have to do defense in depth approach. That's not just one aspect of security, it's multiple aspects. So in addition to smart contract wallet security, consensus algorithm security, decentralized identity security that we are working on right now, and decentralized exchange or DAPP. So also there's the people, process, and policy perspective. So it's a whole suite of things that we need to know. But particularly for your question, when we try to transfer the digital asset, what need to be careful with. So this, in terms of the digital asset, it's the smart contract usually need to be secure. Like if your smart contract itself is not secure, the hacker can transfer your asset to their own wallet, and usually you cannot get it back. In certain cases, you may be able, right? But in most cases, you cannot. A smart contract is deployed, it's permanent. Like unless you build in some upgrade or pause mechanism, right? It will not stop. So that's need to be careful. But it's not just a smart contract. It's also wallet. Like, is this wallet your own wallet? You holding your own key, or is the exchange holding your key, or someone else holding your key? So there's, I think, I don't want to get too deep into it. Just a very high level kind of talking point is a defense in depth approach, and we have to make sure that it's people, policy, and process. It's not just technology.
If you look at the European situation, which is sort of more specific with the GDPR laws that have been implemented some time ago, with the digital identity, you store that on the blockchain, right? And that conflicts with the right to be forgotten, as we call it in Europe, which basically says that I need to be able to go to any enterprise, or I would say organization of some kind, to say, look, I want out. I've got that legal right. Now, on the blockchain, everything's there to stay forever. So there are some solutions for decentralized systems where you only have the hash, and you store these data in a separate database, which means you can take it out. How do you see this specific solution working in a decentralized environment like Metaverse DNA is now planning?
Yes, so in terms of the DID, the decentralized identity perspective, the key idea is the user holding this identity, not the platform, not the third party. So if it integrates with something, some data on chain, the current best practice is you don't put the PII data on the chain, you put the hash of this data on the chain. And the benefit of the hash is one way, right? One way direction. You basically can put like a 3 gig or 3 terabytes of data on chain with just 256 bytes of hash. So
Right.
it's not reversible. You cannot really, right? So it's more like check the integrity of the data if it's being altered or not. So that's kind of the best practice, especially to deal with the GDPR, like you said, the right to be forgotten. So if the data is not in the platform, it's the user has a control of it. That's the beauty of DID, right? So there's nothing actually recorded on the chain. It's only the hash. So hash, it's like there's no way, even with quantum computing, some people get a misconception about quantum computing can break the hash back to its original context. That's not true. That's impossible. So
Thank God.
the asymmetrical encryption, right? But it cannot break the hash.
I have asked and specifically to explain this because obviously our own identity is such a hot item right now in a lot of areas where our identity is basically, I wouldn't say compromised, but you know, due to the pandemic, we had to give up a lot of our privacy. We had to give up a lot of things that belong actually to our own identity. So there is concern worldwide. How far is this supposed to be going, and is it all okay? And if this new technology caters for a solution where this could never be compromised, I think that's why I had you explain this very well, Ken. Thank you, to indicate to our viewers how important this is. Now, Alex, if we go back to your field, you know, economic growth, perceiving that this digital identity, holding your own key and being able to control that through the hash technology, how do you see the economic perspective in growth in the financial transaction sector? Because obviously everything changed over the last 3 to 4 months.
The whole world has been a bit turned upside down. I'm a part of a men's group called METAL, Media, Entertainment, Technology, Alliance Leaders. They changed the things. And there's a person who has a very good track record for investments named William Quigley. And he said that given how everybody was down on the airlines and everybody was down on cruise ships and restaurants and they collapsed, and now the flights are completely full. Lufthansa gave its planes back to leasing, and now all of a sudden people want to travel again and the stocks are going back up. It proves two things. Number one, nobody knows anything, and anyone who says they're an expert and knows everything is full of shit. That's what he said. I'm quoting. So it's not swearing when you're quoting. And so what we see right now is that the underpinnings of this world financial system, and last year, gross global product was about $82 trillion. And we see now statistics that say that the United States is only going to have its economy shrink by 5%, and China is going to grow by 1%, and all these. We don't know what the real numbers are, but what we do know is that with all of the riots and the looting in my neighborhood around me in Santa Monica, 350 stores were destroyed in the space of mostly in 2 hours, and 9 of them were set on fire. And the protesters were going for the gas station, the Chevron station in downtown, to fill up bottles to make Molotov cocktails, because their intention, I have heard, was to burn down the central business district of Santa Monica, which is the main nightlife place that's free of gangs and very safe, other than Universal City Walk. So it's a very major tourist area with big mall and all that. And the owner came out with an automatic weapon and threatened a crowd of 30 people. And 3 times they rushed him and 3 times he held them off. Otherwise, possibly my building would have been burned down. And instead of no people dying, maybe hundreds could have died. And so with the world looking at that, they're going to look at the fact that the whole underpinning of the world economy is the US dollar, is this fiat currency. And now that China, with the second largest economy, and with the drop so much in US GDP, for all we know, even in dollar terms, it could be possible that China has the largest GDP in dollar terms. It already was the largest in purchasing power parity for years. In other words, your dollar can buy more in China than it can in the United States overall, according to economists. And so people are going to be looking to diversify their assets and have non-correlating assets. So they're going to want to put bigger and bigger chunks into digital assets. And the biggest thing keeping that from happening is that people don't know about the security. And I will add only that that if they can just be familiar with one concept, if we had I remember when we had the word World Wide Web during the O.J. Simpson trial, it was the single most used phrase in the news that just popped up out of nowhere. And so if we had that kind of press coverage for multi-sig wallets, so that you have, let's say, 5 people can be signers on a wallet, and you have to move any money, you have to have 3 of them all sign it, or something like that. And you can also have it so that those signatures can be programmed and can only work once a day, or once a week, or once a month, or once a year, so that you can have it so that not only do you have to get 3 of the people, but you have to get it in exactly the right overlapping window when they can all do that. So if we had that one change, then I think that the growth of digital assets would be in the double digits crypto-related digital assets. Because of course, all digital assets, I'm talking about the ones that I cover in the Lightman report, I think that would grow by double digits every month for the rest of the decade.
Okay. Now, Ken, if I'm just an average user and we all in our industry are looking for a broader adoption of blockchain technologies in a much wider sphere, not so much blockchain as a target and not so much cryptocurrencies as a goal, but to have these real use cases. Now, if I'm an average, prospective user of this technology, what do you think that people should look for? Because we all know that the single point of failure in a centralized system has done us some disservice in the past. The industry engaged some problems in that area. So I'm the average user. What should I look for in a system to, be relatively assured that what I'm dealing with is a decentralized, not a single point of failure institution?
Yeah, I think it's a good question, especially like ordinary consumer. It's really hard to really distinguish between a centralized environment and a decentralized environment. So some key things I think which are relatively easily for consumer to look at it. First, to ask some questions like, is the platform itself its own source or it's closed source, right? That's maybe first question to ask. Second is, can I withdraw or deposit funds without censorship? Like if you basically, when you withdraw, you have to wait for a few days, someone has to look at the transaction, then certainly it's a centralized. And the third is, do you own your own keys? So I think for the ordinary consumer, it's really necessary to understand different kinds of wallet, because there is offline, like hardware wallet that is quite secure. There is a level of different level of security, right? Then you have a hot wallet, which is like on your cell phone, and you can download. And it has its own key, but the key is connected to the internet, but you're still holding your own key. So it's a little bit more secure than the wallet which is controlled by other people, like in the centralized exchange. So the rule of thumb actually is like if you have the most of funds is like if you reach a certain level, you need to have most of funds in more secure environment. It's a hardware wallet, which is offline. And in order for you to do the transaction, you sign it in the hardware wallet. Then you sign the transaction. The transaction, once it's signed, it does not reveal any private key. So that you can broadcast to everyone, sign the transaction, because it's only using a signature of the private key. That's again using the hash and the kind of asymmetric encryption, which is one way. So it's secure. So you can just broadcast through your hardware, through your online software, such as the app, right? The cell phone app, you broadcast it. So, and then you maybe have some asset in the exchange. So, but go back to this centralization and decentralized perspective. I think one thing, we have two camps in the blockchain world. One is fundamentally decentralization. Another one is relative decentralization. I think I myself is a relative decentralization camp. I don't think everyone is like everything is 100% decentralized. Even like when you look at the Bitcoin and Ethereum, they have a very large decentralization aspect. But if to a certain point, they do have the centralization to decide, right? Like ETH's fork, because of the DOR attack caused some centralization aspect. And in the Bitcoin, you have the digital, the Bitcoin core and the miner kind of centralization. So, but I think the key idea is you, in normal operation, you want it to be decentralized. And if there is some crisis, you do need some centralization aspect to resolve the crisis. So that's my idea. Like you cannot achieve 100% decentralization. It's impossible. It's a utopia, right? But you want to have as much decentralized as possible in the normal business operation.
Yes. Well, in the cloud conference that we recently had, I was the one to talk about what I feel is the most abused term in blockchain technology, which is the word decentralized, because everybody understands something different amongst it. I think I'm a big fan of anything that promotes wider use of this technology, because I think it means a lot to ordinary people. There's a lot of talk about standardization, Alex, and you know that as well. And everything I see legislation do is suppress a lot of things. Would it help if we stepped out of that circle and said, okay, here are 5 points. If you are a user, this is what you look at, and then you're fairly sure that you are dealing with a decentralized or semi-decentralized situation. Because what I see is we had a lot of initiative on self-regulation, all of them failed. We had a lot of regulatory attempts to organize things, and they still don't come up with something definite. So I would really like both your input in this, because we need to start thinking out of the box here for wider adoption. We now have a pandemic. We have financial inclusion for just a limited amount of the world's population. Due to COVID-19, it's only become much, much worse. We now see the digital asset area sort of growing. We see the traditional markets basically trying to implement their model into the blockchain world. Would it help if we say, let's make 5 basic rules so you can do your first steps and know where you are and what you do, like, you know, the things that Ken just related to, Alex? Because when I talk to people who don't understand anything about blockchains, you know, they just want to know what's in it for me. Is it easy to transfer assets? Can I pay with this stuff? I think people want to be comfortable with the use of it. Would you think that it would help if we came up with like 5 basic outlines, like, okay, if you look at this and that's there?
Well, sure, it would. And we have the example. Bitcoin has been a commercial product. You could buy it or you could trade it send it around to people since January 3rd, 2009. So it's been out now for 11 months, 11 years and 6 months. That's quite a long time. And it has never been successfully hacked. There have been a couple attacks, but they were rolled back very quickly, I think 3 of them. And so we can already see what the elements are. And the first one is, basically had never been successfully hacked in a way that led to people getting away with loot, number one. Number two, it's open source, right? All the code is available to see and anybody can see it. And every new thing, people are making it, putting it out on GitHub or other software depository, the Internet Archive. Number three, you have other people who are able to fork the code. And so forks are an easy way to see if something is decentralized, because anytime you disagree with the core developers, well, just go off and make your own if you want to. And that's very, very healthy. And so the last time I looked, and I wish there was a statistic, like I can see at any moment. And then here's the fourth one. To know the supply through Google, you should be able to just Google the supply. So you can type in number of Bitcoin and you can find it to the Satoshi at any given moment. And then lastly, you should have some kind of predictable emission rate. So you know how much there is, and then you can go backwards. And let's say that the algorithms are set up so that there's a new block every 10 minutes or so. And up until the halvening, it was 12.5 Bitcoin in a block, and it's or the reward for mining and being able to package all of the blocks. And now it's 6.25. So to have the emission rate known so that we can go back in time and forward in time and know what it is. And then finally, what's the total amount that will ever be mined, and to have some mechanism by which anybody can apply to mine or do whatever the process is. So I would think that those are 5 elements, and we can see it working. And the proof is, and I wish that this is what I was getting at before, I think that something like 92% of all the total aggregate market value of crypto is based on the Bitcoin code. Now, does that mean it's the best? No, but it just means that we can build crypto on a fairly solid foundation for something that's entirely decentralized. So we see that there can be anti-fragility in the Nassim Taleb terminology, something that gets better the more that it's stressed. And so we've had the declaration that Bitcoin is dead, over 600 times in the major media, and yet it still keeps living. It's unkillable at this point. And so that should be, I guess, the last criteria, is it can't be killed by the Chinese Central Committee or Donald Trump or Steve Mnuchin. There's no one person, there's no one entity that can kill it worldwide. So maybe it's illegal in your market or your country, but it's not, you can't deny the whole world that. So those are the elements, and that's even more than 5. And I don't think you have to have all of them to call it decentralized, but there is one last criteria, and that is that the Securities and Exchange Commission declares it decentralized. So they've made this finding for Bitcoin. Bitcoin is not a security because of that. And Ethereum is not a security because of that, because it's decentralized. So we even have objective measures. Did they say it, or did they not say that it was decentralized? That's what I have.
To conclude our vision, because we are going to talk more about this subject because there's so many angles to discuss. One thing I thought of as I was preparing for this interview, I've been in the business quite a long time now, and every time something happens in the blockchain space that makes the news in a negative way, it's sort of very focused. There is really a loop over it. Well, we always tend to forget that in the single point of failure banking existing economic system, there's an annual amount of fraud that would, basically solve all our debts in Europe. Credit card fraud, things that are stolen from bank accounts.
Cybercrime in the United States is $400 billion a year.
We don't hear anything as to the extent as to the way anything is portrayed when something happens in the blockchain space. That was the first thing I thought of. It's not in comparison at all. Seems to me like everything that happens in the blockchain or cryptocurrency space is all of a sudden 100 times as big as anything that's going on in the traditional sense. And the other thing that you marked so well, Alex, is about amounts. Okay, we all know that both in Europe, United States, everywhere, the printing presses are running just to make money. And how this is possible for normal folks to understand is very, very difficult. They sort of think, why don't I have one in the basement and solve my mortgage and my debts with it? It's in comparison very out of balance in my personal feeling. And I'm not a coder, as everyone well know, but it's very hard for me to understand that this big gap is still existing in the comparison through traditional systems and the new ways of blockchain technology. I want to close that off because we are going to talk some more about that subject, about these comparisons, because for consumers, at the end of the day, it's very, very important. It's their livelihood. You know, the assets that they gather over a lifetime take care of their retirement, takes care of the college education of the kids. It's very vital that we give some attention, I think, to these topics. I want to thank you both so much for your contribution. Alex, for doing the report of last week, which I find highly interesting because digital assets is one of the big growth areas. And Ken, as co-founder of Metaverse DNA and everything around it, we are going to talk some more about security and hope to see you soon again in the Lightman report interviews and definitely in the next cloud conference. Gives me also the opportunity to announce there is going to be a next cloud conference, and we will be revealing the dates and who's going to talk about that in the very, very near future. So thanks for today, and hope to see you soon.
Thanks, Ken. Thanks, Annemieke.
Thank you.
Yeah, nice to see you again, Alex. See you soon.